This is the best trading strategy for beginners because it's very easy to follow. It has very clear entries, very clear stop losses and take profits, and it has a very, very high win rate. So I'm going to be walking you through this. If you've been struggling to be profitable or if you've been looking for a trading strategy that actually works very well, make sure to like the video, make sure to subscribe to the channel, make sure to click that bell for notifications because we are bringing you the juiciest trading strategies. This is a stripped down version of the exact strategy that I used to take the short trade from the exact high on Bitcoin right here and take the long trade from the exact low right here. So I'm going to be walking you through this step by step. So this is what you are going to do. You are going to open up a new chart in TradingView and turn on that 4-hour time frame. Then we're going to come over to indicators and we're going to search for AO, the awesome oscillator. Go ahead and turn that on. All of our trades are going to be entered using the awesome oscillator. So first we're going to go over how to find an entry, then we're going to go over stop losses and take profit, then we'll touch on risk management. So in order to enter a trade, what we want to do is we want to see something called a divergence. A divergence is when the price and the oscillator do the opposite thing. For example, when the price is getting higher, like it is right here, but our oscillator is getting lower like it is right here. This is called a bearish divergence because price is getting higher, but the momentum is getting lower. And you hear people oftentimes say, it looks like we need to have a correction. Why are they using that term correction? It's because if momentum is leaving the market, yet the price is getting higher, that means things are off of balance and there needs to be a correction. And so these divergences are pretty much going to look like one big hump and then a smaller hump as the price is getting higher. Very similar to this set of uneven butt cheeks. Upside down, we can see right here, this woman has uneven butt cheeks. As the price is getting higher, as we can see right here, to key resistance, we can see that the butt cheeks are getting lower. This is showing us there needs to be a correction to the downside. Now, we are going to be also entering into long trades if we see just the opposite. So let's find an example of a long trade. A good example of that would be right down here where price makes a lower low as the oscillator is making a higher low. This is called a bullish divergence, and it means there needs to be a correction for the upside. And again, we are seeing that nice deep momentum wave right here, and then more of a shallow momentum wave, very much resembling this set of uneven butt cheeks, where we have a very juicy left butt cheek where we just want to poke it with a needle, squeeze the gravy out, and then the right butt cheek over here, nice and skinny, very skinny, just like the waitress at the diner. You know, she's got the veins popping out of her neck and she's super skinny over here, smoking a cigarette. She don't even care that you're not allowed to smoke inside anymore. She got the Brooklyn accent, bringing the coffee over to the table. All right, this is called a bullish divergence right here. Now, when you see the big butt cheek and the small butt cheek, notice where the tip money is. It's in the small butt cheek, right? That's exactly what we're seeing right here. And as you can see, we get a big move to the upside. So we need more confirmation than just a divergence. We need to wait for an actual confirmation. If you want a comprehensive trading course that will give you a point A to point B system so that you always know where you're looking for a trade, stop loss entries, take profits, check out the 20% discount on the course. This is changing the way thousands of people approach these charts. We're currently offering this for 20% off. In addition, if you want to join a thriving community of traders where we give our trade setups in advance, as well as 3 live streams a day where we walk through the live price action, going through the live action, taking scalps. You can join the community at patreon.com/Jason Casper. If you want to take advantage of trading on a ByBit with 0% limit fees, this is great if you are scalping the lower term time frames like I do, scalping on the time minute. 0% limit fees on the 5 minute will save you because those fees cut into your profits. So use my affiliate link to get 0% limit fees. And if you deposit $100, you can get a month free of our very awesome tool, the Crypto Fusion Trading Bot, which basically will trade for you. For more information on the bot, check out the link on the website, jasoncaspertrading.com. You can get a month free if you deposit $100. Let's get back to the trading strategy. So here's what we are going to be waiting for. Notice how the awesome oscillator is divided up into 2 colors. We have our red side and our green side. What we are going to do is when we see that price is putting in a significant low, we are going to mark that out, and then we are going to wait for price to see if there is a lower low that gets put in here. Okay, so if there is a lower low, what we want to do is wait for a candle close confirmation. We want to wait for the awesome oscillator to change color. When we see that we are printing a divergence, we want to wait until it turns back green. And when it does turn green, this is actually going to be our entry right here. As soon as that candle closes, the one that the awesome oscillator turned green on, this is going to be our entry. Okay, the same is true for a short trade. When we come up to the high, right? As soon as we see this oscillator turn from green to red, this is now going to be our entry. Now, we actually don't see the price make a higher high until after it turns red. So in this case, we would wait for this red candle to close, and this would be our entry right here, okay? So again, we're either going to wait for the oscillator to change color, or if the oscillator has already changed color and then we put in our higher high, we will enter after that 4-hour candle closes. So what is going to be our stop loss and what is going to be our take profits? Our stop loss is going to be very, very simple. The stop loss is going to go below the last wick. So in this case, we entered on the close of this 4-hour candle right here. Our stop loss goes below the wick, giving us about a 2% stop loss. Now, what about our take profits? This is what I recommend doing. I recommend hitting a take profit 1 after a 2-to-1 risk reward ratio. What does that mean? That means when we're looking at our long tool here, you'll notice this number, risk reward ratio. This is telling you how much more reward are you getting than risk. Okay, so basically we want to make sure that every trade we take, we're at least going to hit a take profit after there's 2 times more potential reward than risk. So after we hit a 2-to-1 risk reward, which is going to come in right about here, this would be our take profit 1. And what I like to do on the 4-hour time frame is I like to take half the trade out, and then I will set little other take profits along the way up. Once I hit take profit 1, we will move that stop loss to the entry. Okay, so let me kind of show you what I mean here. I actually did take this long trade. And so what we would do is after we get a 2-to-1 risk reward, we would take partial profits out of the position. As you can see, I've taken part of the trade out, right? I've realized some profit down here, but I still have a portion of the trade open, and I've set take profits up along the way. Now, by the way, this was a trade setup we gave in the Casper Crew VIP Discord. In fact, this long trade and this short trade from the high, we gave in advance. That's one of the great things about joining a community. Although it's not a signals group, we absolutely do give accurate technical analysis and show you what we are looking for, specifically the divergences that we want to see at key levels. Because one of the things that's very important about trading is that you understand technical analysis. This is a very beginner strategy. You don't even need to know about levels on the chart. If you know the levels, it can actually help a lot more. But after we hit that TP1, we then move our stop loss to the entry and we set little take profits up along the way. Okay, and the opposite is going to be true now for this short trade. We get our short trade here after the candle closes. We enter right down here. Our stop loss goes above the high. And then we hit a 2-to-1 risk reward, which would basically bring us right down to about here. I mean, literally right here, 2-to-1. We would have hit a take profit 1 on the short. We move our stop loss to the entry, and then we set little take profits along the way. Now, again, you can see here that we need to have a 3.5% stop loss, right? This is because we're not using other technical analysis. The watered down version of the strategy that I actually use to enter my trades, you can see here the short that I took from that level, I had a much better entry because I was looking at other things to get a confirmation. But this is great for beginners because you don't have to know about those levels. You're just using the indicator. Now, if we take a look and we go back in time at the last few trades we could have taken actually using this strategy, we can see that this is a very profitable strategy with a very high win rate. Let's back test this a little bit. Let's go back for 6 months and see all the trades we could have taken with this strategy. Now, before we do that, I need to stress very much that more important than a strategy is risk management. When it comes to trading, it's always a 50-50 shot. If we long or short, there's a 50% chance price could go in our direction. There's a 50% chance price could go against us. If there's anything we can do to put the favor more than a 50-50 shot in our favor, that is very good. If the odds are, let's say, 70-30, it's going to go in our favor, or 80-20, it's going to go in our favor. That is great. But here's the problem. If we're risking more capital than 1 to 2% per trade, we are setting ourselves up for failure over time. Because even if you have an 8 out of 10 win rate and you're risking way too much, it's only going to take 1 or 2 losses to really set you back to the point where it's an uphill battle. So I can't stress this enough. For every trade you take, you need to make sure that you are risking at the most 2% of your whole entire stack. Okay, for more information on risk management, check out jasoncaspertrading.com. Check out the course that we have here. It goes over risk management in extreme detail, but that goes beyond the scope of this video. So we're going to be backtesting right now the different places where we could have used this trading strategy, right? I'm going to go back to September. This was a very, very juicy swing trade that we could have taken back here in September. You can see that as the price was making a lower low, giving us this very bullish divergence, we wait for confirmation when the oscillator turns green right here. That means our entry is going to be at the close of this blue candle. Now notice how long we have to get into the trade. We have 4 times 1, 2, 3, 4, 5, 6. We basically have 24 hours, a whole day to get into this trade, right? Give or take. And so this is not something we need to rush into. If you know price is coming down, making a lower low, just watch and wait for your indicators to confirm. Okay, once we get the confirmation, we're going to enter the trade right here. Our stop loss goes below the low. We shoot for a 2-to-1 risk reward, which means we TP1 right about here. I would say take out 50% of that trade, move the stop loss to the entry, and then set small take profits along the way up, right? This is exactly what I've done for my swing trades. As you can see, if we take a look at the short trade that I am in, and I use the strategy to get into the short trade in general, I mean, you know, I use a more I guess a more developed strategy, but the basics are the same. You can see I've taken profit on the trade at a 2-to-1 risk reward, which is pretty much right about here. Yeah, I mean, because I have such a good entry, my 2-to-1 is here. But I've taken profits on the trade already, and I moved that stop loss to my entry. The same is true with my long trade. I've taken profits. Stop loss is at my entry right now, okay? So that is what we're going to do, and then along the way up, we are going to be taking profits as the price continues more to the upside. All right, let's see the next time that this strategy would have played out. Let's see, we don't really have any good entry signals here. Right, on that little move up, we don't have clear swing highs and swing lows. Okay, so right over here, we would have had another opportunity to get into a long trade because we can see that the price is making a lower low as the oscillator is making a higher low, and when this thing does turn green, it happens right over here. Now, this actually would have been a losing trade, right? So keep in mind, this is why risk management is so important, because this trade right here, stop loss goes below the wick, and we're shooting for a 2-to-1 risk reward, and we actually never hit that 2-to-1 risk reward, right? We actually go to the FTX dump before we hit our 2-to-1 risk reward. This is why it's so important to be risking 1 to 2% of your account, because if you're only risking 1 to 2% of your account, that means the win that you have right here is going to outweigh, you'll still be a net profit after one win and one loss, right? I recommend risking 1% of your account because you probably could have made, 3 to 4% on your account for this trade, and then on this trade, you lose 1%, you're still in net profit 3%. Okay, we have a short opportunity coming up right over here. This is actually before the FTX dump happens. We go ahead, we put on our short trade as soon as this thing confirms the red, which would be right about here. We put our stop loss above the high. And here's something else, guys. The smaller the stop loss you can have, actually, the better the trade can be for you, because then it takes less. You can use a bigger position size, and it takes less of a move for you to hit your risk reward. So right here, we hit our 2-to-1 risk reward, right? We take out 50% of the trade, and now we're still in net profit, right? We've had 2 wins and 1 loss. We're still in net profit. Then we would set take profits along the way down. Obviously, this trade gets stopped out at the entry after take profit, but then we come to our next potential short opportunity. And here's the thing about this strategy. Because we're using the 4-hour time frame, when we get these signals, there is a chance that they are very, very big moves. These could get us into massive swing trades. So right here, we get our next move. This is actually the short before the FTX news came out. Right, that's what's so cool about TA. Honestly, it will tell you the news before the news happens. Stop loss above the swing high. Shoot for our 2-to-1 risk reward ratio, which is a pretty small move right here. It's literally only a 1.5% move where we take out half the trade, and then we set take profits along the way down, and this could have been a very, very massive trade for us. So look at this. We've taken 4 trades, 3 wins, 1 loss, and we're in massive, massive profit. The next time we get an entry for this trade is going to be down here in November 2022. We have put in a much lower low right here, and our oscillator is making for us a higher low, as we can see right over here. And so we would then go ahead and put our trade on as soon as this big blue candle confirms here. So we're going to go ahead, we're going to put our long trade on right here. We are going to put our stop loss below that wick. We are going to shoot for a 2-to-1 risk reward. And you can see that we hit that very, very nicely. We hit a TP1 right here, and then we just kind of let this thing ride. And if we take a look at what would have happened here, we would not have been stopped out after moving our stop loss to our entry, even though we came down a little bit close to the entry, right? We would have kept on going here, right? Because we wouldn't have moved our stop loss until TP1 was hit. We moved to the entry. We never come back down to our entry. We let this thing ride, and it just so happens, guys, that we caught the FTX dump, and then we caught the big move, pretty much coming all the way up to Bitcoin's all-time high. We could have still been holding this trade right now. And that's what's so cool about the strategy, because you're going to get some losses, you're going to get some small moves, but because we're using the 4-hour time frame, you're going to catch a lot of these massive, massive moves. Okay, and then we have a whole bunch of other little trades that can be taken in here using the exact same strategy. So I hope you enjoyed the video. Make sure to like, make sure to subscribe. It's a powerful trading strategy for newer traders because it gives you a very, very clear, defined entry, exit, stop loss, take profit in a system. And what I want you to do is I want you to take this and then build on top of it. Learn more analysis, learn more little things you can do to make your trading better and better, but build off of this, because this is going to be the foundation for pretty much getting you into trading on lower term time frames, scalping, day trading, all that stuff. This is the foundation for it all. So may God bless you all. In the name of Jesus the Messiah, I pray everybody watching is very, very blessed, even if you're not religious. And I'll see everybody in the next video. Peace.